We will either find a way or make one. Hannibal Barca. My friends, that is our commitment here. Every day, 10 to 15 minutes, learning how to follow trends. We will discover what we need to discover with price movement, or we will find another way if what we're doing stops working. But what we're doing works, has worked for years. Trend following, using the price percent oscillator, crossing over the red signal line as our main indicator. And you can just look at our charts. It works time and time again. Is it absolutely perfect? It is not. No use of indicators from the past projecting into the future is a magic crystal ball that is always right. However, when you backtrack and you discover that 80, 85, 90% of the time what you are doing is correct. I would even go as far down as to 70, 75%, depending on how good you are at setting your profit and your loss bands, particular loss bands, and again, following those rules, you will, time and time again, be successful. How do we know that? Well, we know that because you practice trade and you show that it works to yourself. You're not out there spending money. We're not a stock calling service. We're an education firm. We want you to practice with us, learn how this works. Our book is available. Follow the link in the show notes. If you're not a subscriber, then you're not going to get the special training we have for you tonight. It is chapter 3 from our book, Emotions, Fear, and Greed. At the end of today's program, I'll also put in chapters 1 and 2. And of course, the books are available for purchase. We're working on a Hyper E version, that is a hyperlinked electronic book. Right now the book is paper. It's real. It's spiral bound. We have a copy for you. Follow those links. Let's jump into these charts. What do we see going on? Well, we see everything down for the day, save the Nasdaq 100. But let's jump first. And again, S&P not down much, 0.16%. But let's see what we see on these charts. We look at the high so far this week, 385.85. The high last week, 384.95. So we have pushed up during the day to a higher high. That's nice to see. That's what that little wick on top is. If you don't know what these candlesticks are, they are Heikin-Ashi candlesticks. We have a great training. In fact, I'm going to put that at the end of today's program for you, in addition to the first 2 chapters from the newest version of the book. So look for all of that. Heikin-Ashi candlesticks, different from your high open, low close traditional candlestick. We like it better because I think it's simpler and easier to follow. You don't have to learn all those rules, dead crows, 4 old men, whatever all those other candlestick patterns are. The Heikin-Ashi in Japanese, I am told, means average pace. That's what this helps you to see visually. Everything about the charts is visual, being able to quickly assess what's going on with price movement by looking at a chart. The more you do this, the better you will get. That's why we say 10 to 15 minutes every day. Otherwise, you're not going to learn the nuances. Why don't we focus on just 4 charts? So you have 4 charts to get familiar with, to learn the ins and outs, that each chart has its own personality. And the more you track them, the more you practice trade them, the more you fill out your daily worksheet, your weekly market worksheet, and your trade worksheet, the better you're going to become. Those trade worksheets are in your show notes. Again, subscribe for free at chartingwealth.com. You'll see the PDFs. We also have trainings on how to fill out those worksheets. And of course, again, everything is for free, except the book. And again, if you want to support us as a Patreon, thank you. Now, we see that the price percent oscillator on the weekly chart is flat. Derivative oscillator losing momentum. Prices above the weekly trend line. Go to the 2-day. What do we see there? Whew! Price percent oscillator is just over the red signal line. We have a red spinning top. That is an open box. It means a slowdown in the up movement. And that price percent oscillator still barely positive. Derivative oscillator gaining upward momentum. See what things are doing. It's popping up, sliding sideways for a couple of weeks, popping up for 2 weeks, sideways for a couple of weeks, popping up sideways a couple of weeks or so, popping up, and again, it's just sort of, but it's continually just churning its way upward as they print more and more money backed by nothing. Do you hear the sarcasm in my voice? But you know what? I'm following the charts, and they're still going up. So again, I'm going to let the charts lead me. Derivative oscillator gaining upward momentum too. Now let's look at the half day. See where it's up in the morning and then pulling back in the afternoon. Not so great a trend line here on the half day. It is piercing it there at the end of the day, but again, crossing over in the morning. After that upward movement, you still sort of have that follow on from 2 days of trending down. So again, we'll watch, pay attention, keep your eye on that 2-day if you are in this trade at this point. Just be careful, continue to watch. That's where we are on the S&P. The only bright light, and again, it's not much of a bright light, but up a little bit, 0.15%. But look at that candle. It looks nice for the week. Price percent oscillator trying to pull away from the red signal line. Derivative oscillator flat. We go from the weekly to the 2-day. That's nice to see, pulling away from the red signal line, higher high, going up. Derivative oscillator gaining upward momentum, looking good on the Qs. And what do we see on the half day? Up in the morning, not quite as much in the afternoon, but moving up. So the Qs looking nice since we had that double. We had the 2-day and the weekly vertical crossover go up at the same time on Friday. So that was good to see. So far, so good. Let's now leave stocks, go to bonds. Bonds down for the day, 0.19%. Bonds had 2 weeks of strong down movement, the week ending the 8th of January and then the 15th. Since then, looks like it's trying to bottom out and move up a little bit. Small red open box candle pushing above that weekly trend line. Price percent oscillator flat. Derivative oscillator losing downward momentum. 2-day. Trying to get close to crossing over, going up. Hasn't done it yet. Is a green up candle. First green up candle we have seen, open box green up candle, we have seen since back at the end of the year. So again, we'll keep an eye on that on the 2-day. And again, if it crosses over going up on the 2-day, we can only hope that'll be continued on either with a crossover on the weekly, what we call a weekly vertical crossover, or at some point a cross back down like we saw last time that did well for us, a 2-day recross going down back on the 6th of January. We made a nice trade out of that one. Nice practice trade. Now lastly, when we look at bonds, we'll go to the half day. We saw things boom up on Monday and then slow down on Tuesday. Price percent oscillator still positive going up. Derivative oscillator gaining upward momentum. That is where we are as we into Tuesday on bonds. Lastly, we go to gold. Gold was down a little bit, 0.25%. What's gold been doing? Well, since it bottomed out most recently back on the 15th of, wait a second. Yeah, that's not right. Since it bottomed out back on the 15th, well, still is right. Still shows it on the 2-day, doesn't it? We see on the weekly, since gold bottomed out back on Friday the 15th of January, it has been sliding sideways and trying to move up, but again, not really succeeding in that much. Derivative oscillators losing downward momentum. Price percent oscillator nonetheless is still heading down. Now that 2-day, we can see more of a downward movement. Price percent oscillator also losing downward momentum. But we look at where the Heikin-Ashi candlesticks are, again, just a big sideways slide mostly. So what's gold going to do? I don't know. Don't know. I mean, it is still negative on the 2-day, still negative on the weekly. We look at the half day, not crossed over going down yet, sitting right there on, well, that's not even a decent trend line. It's the best I could do with where things are. I drew that at the end of the day, so we're not even going to use that. Derivative oscillator continuing to lose, almost turned negative. Price percent oscillator flat. So again, we'll just wait, watch and see what gold's going to do. I keep hoping, against hope, that gold's going to finish its bottoming and fly up at some point. Hasn't done it yet. So we'll just continue to track, See what gold shows us. Now, Bitcoin, let's go to that at the end. Down 7.65%. We've kept telling you, don't get into Bitcoin on a practice trade right now. Why? Because it peaked. It's already peaked at about $41,000 and is forming a red down candle on the weekly chart. Price percent oscillator still positive, but heading down. Derivative oscillator already starting to show negative. 2-day. Remember when that 2-day crossed over going down recently? Well, it again still showing red candles. Price percent oscillator pulling away from the red signal line. Derivative oscillator going down. We see the half-day trying to cross over going up, but couldn't do it, and then sandwiching down again on Tuesday. Price percent oscillator going down. Derivative oscillator still losing downward momentum. That oscillation comes from 2 days of sliding sideways and up movement. So, not the time to get into Bitcoin right now. No matter what you hear from the talking heads, keep your powder dry on your practice trade. Wait for Bitcoin to consolidate, and at some point, start moving up again. Or unless Peter Schiff is right and it just crashes at some point. We'll wait, we'll see, we'll track it, and we'll let the market decide for us. Folks, that's where we are as we end the day. Thank you again so much for your support. We are here for you. We love to hear from you. Don't hesitate to write us, cw@chartingwealth.com. Patreon members, we love you. We so appreciate you. Don't forget, we're having coming up soon, that first week in February, we're going to have our live Patreon question and answer like we always do. As I'm looking at my calendar, I can tell you when that is. It's next Wednesday, the 3rd of February. Can't wait to have you join us, 12:30 Eastern Standard Time here in the U.S. The emails will go out if you're not a Patreon supporter. Why are you not supporting the channel? We got a lot of expenses doing this for free. And we would sure appreciate those of you who get a lot out of this, helping us. Because the texting service, the updates, the emails, the webmaster, all those things cost us a great deal of money. And we so appreciate all of our Patreon supporters. And guess what you get? You get that 3-part training, Options Made Simple, the Charting Wealth Way. In addition to, you get the live question and answer monthly call-in session where we help you with your practice trading, review the charts you're interested in, answer your questions, and just have a blast. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.